Welcome to Subramani. Uh, I'm going to talk about the bubbles that have been seen in the world in the equity markets, generally in markets, not necessarily in equity markets, including the tulip market and the Japanese real estate market. Why am I doing this? Because one of the best books that I have read about this is Devil Takes the Hindmost by Edward Chancellor. Book which most of you must have read. If you have not read, it's a book worth buying and reading. Of course, Amit Trivedi has also written a book called Riding the Roller Coaster. More in the, it's an Indian book, but more talking again about these bubbles and booms, bust, cycles, and things like that. So, knowing the difference between are we in a bubble in the market or are we at the peak of a cycle is not going to be very easy. For example, 2003 to 2007, people say market peaked out. Of course, market peaked out, but understand that pharma and FMCG did not participate. But infrastructure, yes, there was a unbelievable boom. BHEL was at 304 and then it came down to just 25 rupees in the year 2020. That was the kind of value destruction you would have seen. So yes, there it was. So today what I am going to do is again, see, only thing about the bubbles is everybody has spoken about it, whether it is Ben Carlson, whether it is Jason Zweig or everybody and anybody has spoken about it. So here I am trying to do something like saying I have done one video a couple of days back about a boom cycle or the business cycle peak and a bubble. So here I am trying to just put down all those in sequence as to which were the real big ones. The most often heard one is the South Sea bubble. Then you would have learnt about the tulip mania. Then the Japanese markets, right? So all these things. So the Japanese market I will do separately. But if you were to rank all this on the basis of impact that it had, on the number of people it impacted, on the size of the total boom, right? Total boom or total impact. So $1 million, $10 million, $100 million, right? So knowing how big it was and how many people it impacted is very useful. For example, if I tell you there was such a, let me just go and speak about each one of them. So we start with the tulip mania, which is 1637 chronology. Let me give you the chronology first. 1637 was tulip mania. Then there was the South Sea bubble at 1720. This is the famous one which hit Sir Isaac Newton. 1929 was a great crash. 1989 Japan .com was 2000. US housing was 2007. Bitcoin was 2021 or 22, right? So these were all the so-called big bubbles which happened. So let us look at each one of them, or let us look at what has to be in our definition, what has to be great. First is it has to have size. Second, it has to have impact on the how much the price went up and how big an impact it was. Was it just in confined to one small city or just Europe or just Japan, or whether it impacted all over the world like the Bitcoin did, right? So the impact and how quickly did the market recover from this so-called bubble, right? So we will look at each one of them, and it is necessary to have all these in perspective so that to know that something like the South Sea bubble I don't think had a greater impact than the Japan thing, right? So let's look at the numbers. Some of these bubbles were just too small. For example, the tulip mania of 1637 goes down as the biggest thing. It was how speculative it was and things like that. But it had no, first of all, it is unbelievable that somebody could pay such a high price for a perishable product, right? So somewhere it has to hit you that this is a perishable product. Whatever price you pay, it has a limited life. Unless you can find a greater fool to whom you can sell it at a higher price, it is not, it is ultimately a perishable, right? The problem is it was not too large, it was not too big, right? It impacted a very few people. It impacted very few people. And Anna Goldragg or Goldgar, Anna Goldgar, who wrote about the tulip mania, said prices could be high, but mostly they weren't too high. Although it's true that the most expensive tulip sold for 5,000 guilders, which was the price of a house. Only about 30-40 people, in fact she says 37 people spend more than 3,000 guilders on bulbs, around the yearly wage of a master craftsman. And again, as I said, many people have written about it. Jasonsvig Road, at the peak, the market for rare tulips seems to have been limited to a few hundred people in total, many of whom traded only once or twice. Now look at the impact of a Reliance Power IPO. More than 1,000 people would have been impacted just in one suburb of a big city like Bombay. Like one Ghatkopar, there must have been more people who applied for the Reliance Power issue and lost money than compared to the whole tulip mania, right? But since it was 1637, perhaps it has got exaggerated, saying, oh my god, it is such a big impact. It was not such a big impact. Same thing with the South Sea bubble of 1720. Yes, of course it got Sir Isaac Newton into it, but other than that, it impacted just the shareholders of one company. Right. So let us look at how many shareholders were there. It was more like, the South Sea bubble is more like the Reliance IPO, Reliance Power IPO. The South Sea bubble scheme was that it wasn't particularly large, and there was no evidence of it being widespread. Like, here I am quoting Edward Chancellor, says, although the South Sea bubble fell to 15% of its peak, and the Bank of England and East India shares also fell by nearly 2/3, the number of mercantile bankruptcies in 1721 did not increase significantly from the previous year, and the economy recovered quickly. Right, so it was not so great. It's like, did Reliance Power IPO hit people? Yes, of course it did people. Then so did MS Shoes, so did ATV Petrochem. You wouldn't have even heard of these. Did they bankrupt the country? Did they have any great impact on the country over a long period of time? Answer is no. Yes, the Paytm issue was a disaster in terms of what the shareholders lost. But did it take the country down? Did it take too much time to recover? No, people just laughed and said, oh my god, why did people give a exit to venture capitalists? Well, India does it. Every Nykaa and all those companies gave a fantastic exit to the venture capitalists, but these were not really called bubbles, right? So were they bubbles? In my mind, yes, but then they impacted lesser number of people. So South Sea bubble, again, we speak about it quite a bit, but then one bunch of shareholders in one company where the pricing was very badly done. I'm sure all these events led to control. In India we had something called Controller of Capital Issues. In US you have SEC. So every country then started saying that, okay, the venture capitalists cannot, or shareholders cannot price it themselves, or companies should be making profit for 3 years, right? All those conditions started coming in, the regulations started coming in. So I wouldn't really put it that in that category. Even the Bitcoin of 2021, yes, Bitcoin went up 10x, right? So 10x from 2020, early 2020, 2021. If you did not put money in Bitcoin, you were considered to be some kind of a freako, and you were wrong, right? Kids were telling their parents, look, you can't understand, don't do it, it's for me to do. And of course they lost money, and they lost maybe 75% of it. But the total size of the Bitcoin compared to the market capitalization of the world, I don't think it was too much. Let me just give you those numbers. Bitcoin, easy to call it the greatest, but then Bitcoin, yes, of course Bitcoin lost a lot of money, billions of dollars, but compared to the 40 trillion 37 trillion market cap of US, Bitcoin wouldn't have lost more than $1 billion perhaps. That's about it. It's not so big. Let me get the numbers from somewhere. Bitcoin lost about 800 billion following the 2021 peak. Sorry, I made a mistake. I was thinking in terms of a trillion. I thought it must have lost a trillion. It has lost less than a trillion. So compared to 40 trillion of the market cap of US, it lost less than a trillion. 800 billion is what it lost. Of course, some of it would have been recovered in 2022 and 23, but was it too big? The answer is no, it was not so big. It was not even as big as, say, the US 2007 housing scam or housing boom, right? So when people can flip assets a lot, right? You buy in January, you sell in March and February, March or April, and then you double your money, triple your money, then you buy 4 houses, then you sell one, then you use that money to buy another house, so you suddenly have 10, 11 houses. When you do that, you realize that or you start thinking that this is the way to make money, right? Why would you go and work and slog all day just to earn money when you can earn money in such a simple way? This is a great indicator to say, okay, this can't sustain for too long. Interest rates could go up, right? Look at something like SVC Bank. It was so simple to understand that if you don't do a mark to market on a monthly basis, weekly basis, whatever, obviously, fairly obviously, you will take a hit. I don't think as a banker you need to be taught this, right? You have to do mark to market of your assets, especially if you have concentrated assets. It does not matter that you have concentrated assets of the treasury bill or of the 30-year. Let's say you have 30-year G-Secs in India and the interest rates are pretty low. Interest rates are, say, 4%, and you have it, and interest rate goes from 4 to 8%. It has doubled. So the portfolio would have definitely taken a hit, right? So if it's a long dated portfolio, yes, it would have taken a 50% fall. Even if you have concentrated exposure in a great thing like a gilt, you can take a hit. That's a very important learning from SVC Bank, right? So US housing bubble of 2007 is big in terms of size. If you look at it was about the US residential housing market declined from 29.2 trillion to 22.7 trillion when it hit bottom. That is a fall of 6.5 trillion in a span of a decade. Now compare this to the Bitcoin, right? And this is I'm sure all these prices are adjusted to today. So the Bitcoin was just 1/6 of the housing bubble, right? So are we in another housing bubble? I don't know, but at least in Canada, definitely it seems to be a housing bubble, because I'm sure prices are going to come down. US housing prices, but only thing with US housing bubble was it was over a longer period of time. Unlike the Bitcoin, it was over a longer period of time, and obviously a lot of genuine buyers were also there apart from flippers, right? So again, price went up, then it came down, then market recovered. Let me just check out how soon did the market recover. The US real estate market showed some extreme behavior, but the aggregate price changes of about less than 2% don't compare to the other bubbles on the list, right? So additionally, US housing prices recovered within a decade of their old highs. So yes, it was hurtful. If you were a flipper, you really got hurt. And then look at the quicker recovery bubbles. The great crash of 1929, I think the recovery time, again, the percentage of people investing in equities in 1929 was very small. So I think we will take it in the next one. Thank you.